Alright, hello, my name is Sammy and this is my first YouTube video. Kinda here to document my trading, my journey, and trying to help with my psychology as well. Just go over everything and everything. And yeah, I've been trading for about 6 months now. I passed an FTMO evaluation, but I blew it. And yeah, so I blew the FTMO verification stage. Very annoying, but now I've got a 10k and a 25k I'm trying to pass. Right now, they are at break even. It's really irritating. I can't seem to get them above the zero line. And yeah, I think it's my psychology because I know this strategy pretty well, but I'm gonna just go over some stuff, I guess. The strategy, funded accounts, I know some example trades, my back testing, and my journal. Right, so 6 months of trading, and this is my 10k. Obviously, this is not 6 months worth of a 10k. This has probably been around for about 14th of August, so about 2 months now. And yeah, just look at that, so break even. It's so annoying. Up 6%, fairly close, down, up, down, up, down, up, down. Right now, look at that, back up. I don't know what to do. My stats are alright, pretty shit win rate. On backtest it's a lot higher, but yeah, when you're funded it's just different for some reason. You know, RR is good, that's quite good, that's consistent. But yeah, just not profitable really at all. It's so, another feeling, it's because of my psychology. I'm just taking bad trades, which you will see in a minute. Here's a 25k. Again, pretty break even. I've had this for only a month though. Got it up to around, what's that, 4%, around that. And yeah, just literally break even. Again, break even. I managed to get out of the negative. Yeah, kind of annoying. Stats here, better win rate, that's for sure. So kind of improved this account, but yeah, worse RR. It's because I think my psychology is just really washed right now, and I just gotta stay more consistent and get the better trades and not close early or anything. But yeah, what I've been doing on this 25k, not the 10k, is tracking every trade. Well, I haven't done these couple here, but all these trades I've tracked and added to a journal where I've kind of rated them, and I thought that would kind of help my strategy. And yeah, I think it's good. It makes you look back on the trades once you place them and be like, why did I do that? What's the point? And then you can actually see how, kind of visually your win rate and stuff. It's quite interesting. Okay, here it is, 25k funded journal. On Notion, I think it's really good, to be fair, Notion. And yeah, look at that. This is it. Oh, loss, break even. Couple wins in there. Good thing about this strategy is that because of the high RRs, even though I've had a pretty low win rate, I can't lie, we're still break even. So but yeah, I gotta just start winning more. I can't lie, that's it. Basically, what I've done is I've just, symbol ratio, screenshot of the trade, emotion, pick one of these, trade rating, that's really important, and the explanation of the rating as well. So this one failed to break all the previous highs. Yeah, look at that. That's 1, 2, 3, 4. I don't even know why I entered on that because that's such a bearish signal. And yeah, also the time frame as well, that's quite important. For some reason it's one after the other. I don't really know why. But yeah, and I've just got some simple rules here. And yeah, thing is, I actually do really think this is going to help. But yeah, I just got to lock in and stop losing and start getting my psychology better. Yeah, anyway, I'll go over I'll go over my setup and I'll go over my strategy and kind of describe how it works. For my sake as well, so I can fully kind of comprehend it. This here is the fundamental kind of idea of the strategy and what I'm looking for if I was to enter a trade. It is called liquidity, supply and demand. So it is, normal supply and demand with these zones, but we add this element of liquidity in the middle. So what am I kind of waiting for if I want to place a trade? We kind of wait for this structure where there's a demand zone followed by a big movement, like actually right here. This is actually a good example right now. Demand zone followed by a big movement, and then price retraces and forms this low that is above the zone. Now what this does here is it creates liquidity. Yeah, liquidity is created, then we wait for breaker structure to the upside because this is obviously a demand zone. We want to see some kind of bullish momentum in this setup. If price retraces back to the zone and wicks in, we are able to enter and hopefully ride that momentum that these institutions are providing with this order block / demand zone. So yeah, as you can see right here, demand zone goes up. And then yeah, wait, right here, this is all liquidity. These are all stops of, other traders in the market because that is a low and they place their stops under lows like we would do up there, place the stops above. And wait for price to retrace, and if it does retrace and wick into the zone and close bullish, we will be able to enter and hopefully that'll go that way. Here we are, this is the chart, these are my charts, yeah, quite nice colours. Designed to get rich. That's how we do it. This is the setup I trade. And the key thing about it, it's all about understanding how institutions move the market and positioning ourselves to trade with them, not against them. So, first step, identify the demand zone. This is this area here, the grey box. Supply zone is one that is the bullish candle followed by a very big movement. That there is a supply zone, or this is a price where investors missed out on. Price moved too quickly. And this is also a price where institutions accumulate before the drop, because they obviously can't enter at once. They want to enter at different points. And yeah, here's another one right here. That's another supply. See if you can find any demands. There's one right here. Demand zone is just, the bearish candle before the big movement. You can also get accuracy zones, like right here. This is an accuracy supply zone because this candle is bigger than the next candle. So if it's ever bigger, just the wick. If the wick is bigger than anything on this, you have to just cut it and just have like that. So it's accuracy, more accurate. Right, here's an accuracy demand zone. The last red candle before the big movement. We just cut it. So we just literally make it smaller and more accurate. This is the last downward candle before the big movement up, and this is basically where institutions have accumulated orders. That's how I think. Also, as I said again, it's a mispriced. Price move quickly. It's an area where investors missed out on. So obviously when it comes back down, they're buying at that key area instead of buying up here and losing potentially lots of money. Right, now here's a key thing about the strategy. What separates this from just normal supply and demand is this liquidity here under the middle high. Goes like that. Order block there, invest there, TP up here with the breaker structure high. Here, this area is really important. This is where retail traders and, obviously maybe institutions, they have their stop loss there because it's like a swing low. If you're in there right now without this, other traders are buying this breakout, putting their stop loss below the low. And then when it goes up, obviously they would put their stop loss there because that is what they do, they put it below the low. This creates what is called a liquidity pool. There's hundreds of thousands, well, actually not sure, but there's a lot of these, there's a lot of these orders. All of them have stop losses here, right here. This area above the zone, below the wick, is all liquidity from here, all of it. And there's more there as well. They add it again there. It creates a big pool of liquidity. Now, institutions and banks and whatever, the big players who have the money, who move the market, need liquidity to fill their orders. They have to. They can't just buy at the same time. That's key to understand. They have so much money. If they buy at the same time in that position, they will move the market literally. And they won't even be able to enter really, because even the market makers, they don't have enough liquidity to provide. They need someone on the other side selling to them, which, as you guessed it, is all of this liquidity. They're going to take that chance to enter a trade because there's a lot of liquidity here. And right, here it is, the liquidity sweep. Price pushes down, all these stop losses get hit, they got taken. And the stop loss is basically in order to sell. So right now, look at this. We have all these sellers and the institutions are now able to buy because they've got the liquidity. People are now selling to them. When there's liquidity, that has an option there to buy for the institutions. All of it, they absorb all of the selling pressure. And guess what that means? There's an imbalance in buyers and sellers, supply and demand. Price shoots up. Well, hopefully if you get the right zone and stuff. I would just target this area here because I don't know, we just do. Send it, get a high RR, look at that, 1 to 3.13. Could have held for what, if you wanted to hold. Not a 1 to 5, but you could go a 1 to 4, easy. So yeah, basically the whole point is to go with the institutions. And here's another setup that literally happened right before it. Another good example, order block here. Price pushes up past the order block, or, demand zone. Liquidity created. There's someone who brought in on this white candle here. And because that's a low, they put their stop loss there. Same here, liquidity again, with their stop losses there and there. Now, price, bam, breaks it. The price goes down and all the liquidity, all the retail buyers are just stopped out. That gives institutions the chance to buy, as there is now enough liquidity really for them to make a good purchase, a good investment into the currency or into the commodity gold. So, and yeah, order block as well, very important price for these institutions. So they have also entered there. They have their positions here. So when price comes down, they want to defend it. They like defending their positions. Price went down all the way down there. They would all be down in money, and that's millions down. They like to defend it and they add more positions. And look at that. Sellers been stopped out. And then bam, price reverses quite very quickly. Don't even get into down draw. You get maybe break even. Nah, in profit for the whole way. And yeah, the good thing about this strategy is that it catches, snipes it kind of. It gets the bottom wick of the movement. It's literally like getting the corner, like there, sniping that low or high. And then you get these huge RRs, like here. Like, right, you could have just held for like a 1 to 8. But yeah, that is basically my strategy. Waiting for it to create this liquidity, then wicking into this zone. And then we just enter here. I'm currently in the trade. Sell on AUD JPY on the 30-minute time frame. Almost stopped out. I'm not really sure how I'm still in. But on my funded, I am still in on my funded. Down about 0.25% right now. I'm risking 0.5%. So if it loses, it is what it is. But this is a valid trade. Liquidity here comes down, wicks in, and then closes bearish in the direction. So I don't enter there because it doesn't close bearish. I enter there on the confirmation candle. And yeah, I normally open my stop loss there, but actually somehow I think I raised it a bit more. 5.78, 1 to 6. Overall structure, bearish in the short term, but on the 4 hour, it's pretty bullish, I can't lie. We will see. Anyway, thank you very much for watching if you did, and I'll probably come. Oh, look, it's rejecting. Yeah, I'll probably come out with some other videos soon, I'm really sure. Came back to my computer, and look at that. Wow, so close to getting fucking. Oh my god, I can't believe it. This may actually win. Good thing about the strategy, even though I'm in down draw, or well, break even at least. I think now I'm in down draw, yeah, I had a couple bad trades, but like, that's a good thing about the strategy. High RRs, you can make back what you lose plus more. Very good. Anyway, thank you very much, and see you again sometime, hopefully.